as insider buyers stepped in. Stock up 6%, but still shedding more than $81 billion in market cap for this week. Two other names making a comeback today. Coinbase jumping as one Wall Street analyst says the recent sell-off was overdone. And Pfizer clawing back a bit, but still down 9% on the week.
And that's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan, reunited. It feels so good. A big week for the markets and your money. The S&P 500 was higher every day. The NASDAQ up 7%. We're going to get our panel's take on whether things have gone too far too fast. Plus, retail earnings will be a big influence over stocks next week. Results coming from Home Depot, Lowe's, and Target, among others. We'll hear from a portfolio manager who thinks the consumer will remain resilient in the face of tariffs.
We begin this market and a positive week for investors with the S&P 500 higher. Fifth positive day, longest daily win streak since May 2nd. Tech and discretionary are among the top S&P 500 sector winners week to date. The NASDAQ is also higher by 7%, but let's break all of this down with Unlimited CEO and CIO Bob Elliott and Truist Wealth Co-Chief Investment Officer Keith Lerner. Great to have you both here. Keith, I'm going to start with you because this really is a stock market that feels like it's continuing to trade on the optimism around trade tailwinds. But you say that the biggest story in your view isn't the uncertainty we've seen here. Instead, it's what we're seeing in tech. Why?
Yeah, well, great to be with you. I mean, it was a big story to see the de-escalation, right, of tariffs, because all of a sudden the market was pricing in a 60% chance of recession. Now you've brought that down to maybe 1 in 3, and the market's repriced up. But I do think a big story that kind of got pushed aside during all this tariff uncertainty is the AI theme. Remember, the big theme of this bull market that we were all talking about last year and early this year is AI. And what we saw during this earnings season is that tech spending remains very healthy, and that even if the economy slows down, you're likely to see that tech spend continue. And if you look at tech earnings, those forward earning estimates continue to move higher, and they account, tech and communications accounts for about 40% of the overall market. So I think that story is reemerging as we move past some of this tariff uncertainty.
Bob, what's the bond market telling us? We've been talking about bond vigilantes. There's been a lot of focus this week on this reconciliation bill, which didn't make its way through the House in the first attempt, but is certainly back in focus as we go into the weekend and next.
Well, I think the big question coming into the administration as a whole, and really over the course of the last couple of weeks, has been whether the administration would pursue a fiscal set of policies that were going to be tight and lead to negative growth impacts, whether it be through tariffs or through implementing a fair number of pay-fors for the TCJA extension. And I think we've seen a lot of information in the course of the last week that has shown that the administration is pretty committed to pursuing much more expansionary policy ahead. You're looking at a deficit based upon the bill that's currently trying to get out of committee that would expand the U.S. government deficit by 1.5% of GDP in the next year. That's quite expansionary. And then on top of it, we've basically gone from a place where tariffs would be a 1.5% to 2% drag on the economy ahead to one in which there's going to probably be some modest challenges as a result of it. And so that's a pretty radical set of policy changes from contractionary to much more stimulative. It's happened over the last week, and probably, if anything, the bond market isn't reflecting the magnitude of that shift with its moves so far.